cash on cash return. Everybody's question. How much will I make off the money that I put into the investment? Will this be a better investment compared to other investment alternatives? This, in my opinion, is the most exciting number to figure out. Oftentimes, this number is the only number some investors look at. The number tells the investor how fast the money they invested into the property can be returned to them, which is usually represented in a percentage of the invested amount. This formula allows the investor to have a number to compare alternative investment types by a cash on cash return, an annualized cash on cash return, and an internal rate of return. In this video, we are going to cover the cash on cash return and the annualized cash on cash return. So the COCR is a percentage return you as the investor receive back from your investment for a specific period, usually 1 year. The COCR considers only the cash that is generated through the operation of the investment property. For example, if you invest $10,000 and the investment returned to you $1,000, your COCR would be 10%. Cash on cash return usually refers to the return of cash on an annual basis and is used primarily for investments that provide monthly, quarterly, or annual cash flow. So a cash on cash return is calculated this way. It's the net operating income minus debt service and capital expenses equals the cash flow. And we usually calculate this in an annual figure. Then it would be the cash flow divided by your initial investment equals the COCR percentage. So let's look at this again. If you invested $35,000, the net operating income was $9,794 minus the debt service of $3,752 equals a cash flow of $6,042. So to figure the cash on cash return, it would be the $6,042 divided by your initial investment of $35,000, which would equal the 17% cash on cash return. So let's look at an annualized cash on cash return. Annualized cash on cash return refers to the average cash on cash return per year over the life of the investment. So the cash on cash return figure is from the purchase of the property to the sale of the property. So the cash on cash return only uses the cash flow that was produced by the investment property each year. It also considers the gains of the property when selling, including the money paydown and appreciation, and the length of time you own the investment. Length of the investment years divided by the initial invested divided by the cash flow plus the proceeds at resale equal the annual cash on cash return. Most investors like the annualized cash on cash return because it accounts for all the return on their investment and how long their money was invested in the property. The negative of the annualized cash on cash return is that it does require you to make assumptions, such as the sale price that you will get at the date of the sale, which may or may not be an accurate assumption. With that being said, be conservative in your assumptions. In being conservative, this can be one of the best measurements of the return for a potential investment property. So let's figure this together. Let's say you purchased a multi-unit property. The initial purchase price was $560,000. Closing cost at purchase was $8,850. You put $115,000 into the investment. So cash flow each year, year one, 36,000, year two, 39,000, year three, 44,000, year four, 46,000, and year five, 55,000. So total cash flow was 220,000. Sales price at year 5 was 715,000. So how do we figure the appreciation? Future sales price of 715,000 minus the initial purchase price of 560,000 plus the initial closing costs of 8,850 equals $146,150. Now we have to figure the loan pay down, which is the initial loan balance minus the future loan balance. Since you have been making loan payments for the last 5 years, which include principal and interest, you started with a loan balance of $495,000. Remember, we put money down. And your loan balance is at resale is now only $367,420. So that means your loan down payment is $127,580, which you will receive when you sell your property. Sales costs that should be considered would be realtor commissions. I often figure 5% on a large sale like this, but it depends on your agent. So the sales costs would be the sales price of $715,000 times the sales cost at 5% would be $35,750. Now let's show what kind of money you've made. So the total return would be the total cash flow plus the appreciation minus sales costs equals your total return of $457,980. So the total cash on cash return is the total return of $457,980 divided by the initial investment of $115,000 would be a 398% cash on cash return. Phenomenal. Annualized cash on cash return, we would figure that by the total return of $457,980 divided by the initial investment of $115,000 divided by the years invested would be an 80% annualized cash on cash return. Boy, there's a lot in this video and a lot of figures that you have to go through. I hope you watch this video several times and it makes sense to you. I hope this helps you in your investments, and we'll look forward to seeing you on the next video.